Thanks so much, Haley. Hi, everyone. This is Angela speaking. Good afternoon and welcome. Thank you for joining us today. So what we're here to do today is talk through some of the key takeaways and some initial insights from a new market landscape that published this week. So that's our hardware subscription services market landscape. A brand new piece of research that Eric and I collaborated on that looks at subscription offerings across both the data center and devices ecosystem. So we'll be talking about what some of the key takeaways from that research are, looking at the market forecasts and talking about some of the big trends. Before we jump into the takeaways, we thought it'd be great to level set on what is it that we're really talking about. There's so many types of as-a-service offerings in the market. There's lots of different definitions for all kinds of different offerings. So when we're referring to hardware subscription services, really we're talking about data center or devices offerings that are acquired through a subscription-based pricing model. So when we define subscription-based pricing models, from a TBR perspective, we think that they need to include the hardware bundled in, any core software, services, and support for a recurring fee, whether that's monthly, quarterly, what have you. So it's all of these elements bundled together in a consistent pricing model. Example acronyms could be PC as a service, device as a service, hardware as a service. There's really kind of an infinite number of them, but that's ultimately the types of offerings we're talking about today. And you'll see on our next slide here's a bunch of great examples of types of offerings that we see in this landscape. We've mapped them out here in terms of where they've hit the market for a little bit of context, right? So in general, this overall subscription offerings market was mostly established first on the PC side in terms of the formal subscription offerings. 4 to 5 years ago, when we saw HP, Lenovo, and Dell coming to market with the DAS and PC as a service offerings, kind of got things going. In the last 2 years, we've seen a huge proliferation on the data center side of new as-a-service brand portfolios entering the space, many of which are actually evolutions of previous offerings. For example, we've seen Dell Technologies On Demand evolve into Dell Technologies Apex, which really represents a shift in the overall landscape of vendors initially focusing on financial services models, very oriented towards the payment structure, and now adjusting that focus to be more solution and outcome oriented. So hopefully this helps to make it clear about the types of offerings that we've looked at in our research as we're going forward and talking about some of the overarching trends. So with that context, the first piece we're going to start at is looking at our overall market forecast. And then I'll invite Eric to feel free to chime in at any time. Unfortunately, Eric is a bit under the weather today, so you'll hear mostly my voice, but Eric, feel free to jump in if there's anything else you'd like to add. So as far as our market size goes here, a couple of notes around methodology. First of all, the market size we're looking at here is based on the vendors and offerings you saw on that previous slide. So this is, although we think it comprises a huge percentage of the market, there are certainly other offerings out there. There are buyers and resellers who have created their own offerings in this space, for example, which are definitely compete in this area, or they may resell offerings of these vendors. There are other players as well that we are, evaluating and looking to grow this as this market continues to grow. This forecast is also looking at, annual revenue. So a lot of the metrics you may see vendors report in this area, if they do report anything, are often total contract value. So looking at kind of the total contract value, or it's not really the same thing as what we're looking at here. We're estimating, what the actual revenue was in a specific year versus the total committed and potential revenue that all of these vendors may collect in the future. So we're trying to look at what revenue has come in and then project how that's going to grow over the next few years. So as it's progressed thus far, looking in the early stages of this forecast, 2020 and 2021, and we see this year the total market at about $4.5 billion, growing overall at about a 33% CAGR towards, we estimate about $12.5 billion in 2024. Today, you see that the devices business is, in terms of size, larger than the data center business. We think that, certainly in terms of growth, as you saw on the contextual timeline, the data center offerings have a huge, on-ramp and potential growth ramp given the proliferation of new offerings we've seen enter the market this year and at the end of 2020. But they just haven't had a chance yet to catch up to kind of the size and growth of the devices and service market. We've seen also in terms of the data center market, initially we expected faster growth, I think, this year and last year than what we ended up hearing about in our market conversations, partially because I think the pandemic conditions impacted the data center space a little differently than the PC as a service space where there was actually kind of strong increases in demand. So we'll touch on that a little bit later as well. Eric, anything else we should touch on here?
No, I'm going to hit on the device part specifically on the device side.
Great, excellent. Yep, I think, I saw we had a question already on device-specific growth rates. So we'll share those in a minute as well. So ultimately, in order to get to that $12.5 billion number we showed in 2024, that's really ultimately dependent on how well vendors lean into the different accelerators and inhibitors in the market as we're seeing them today. Here we've provided a list of some of the different things we've heard in our conversations and things we've taken into account when we were forecasting and looking at the opportunity that exists in this market. We'll see that, at the top here, COVID-19, it's on both sides, accelerator and inhibitor. On the devices side, we've heard that remote work has really helped propel increased adoption as a service models, and particularly I think as companies continue to need to refresh and their employees are still remote, that trend is likely to continue, which I think Eric will touch on, as well as some of the trends we've seen in other verticals like education. On the data center side, there was more challenge in terms of certain projects being stalled in the past year within data center, as well as obviously accelerated adoption of some cloud alternatives. So that did impact adoption of as-a-service offerings specifically, I think more so than originally estimated. But we're kind of seeing that that turning a corner now. When it comes to the market accelerators overall, I think they generally fall into a couple of categories. So there's market awareness, and then the vendor's ability to tune their portfolios in a way that will appeal to customers and in a way that is scalable. So as far as the market awareness, I think at this point, we've come really quite a long way in terms of customer understanding of these types of offerings, and the continued education by vendors in the space to help customers understand the value proposition there, and also real evolution in terms of the messaging of from focusing on more of the financial aspects to the actual outcomes and what can be accomplished by utilizing these offerings. It's not really just a payment option. On the customer appeal and scale side, for example, we've seen a lot of shifts in expanding offerings with greater options in SMB and mid-market, lowering spend thresholds that make solutions more accessible to more customers. On the data center side, much more packaged data center offerings. We often hear the term, T-shirt sizing that helps customers get closer to the specific solution they need faster, which is helping speed up sales cycles as well. And again, critical in terms of the scale of helping this market grow is reducing the level of customization that goes into every single deal, making that faster, and ultimately just being able to reach more customers. We've seen an increase in proof of concept and trial programs as well, and that's helped a lot on the data center side, where there is more perceived risk than trying device as a service on the PC side. So there's still concerns that overspending could potentially happen in this type of model. So customers want to be sure that they really can scale the solutions to the degree that they expect. So those trial programs are certainly helping in terms of reducing perceived risk. On the inhibitor side, most of these are around changes in business models for both on the vendor side and the customer side. So helping sales teams adapt to new selling approach and new conversation, as well as having to target, in some cases, new customers or new stakeholders. They may be higher up in the organization than sellers typically are working with. So that has been a challenge that has slowed adoption previously, as well as on the customer side, overcoming fixed budget cycles, overcoming change, perceived risk, competing alternatives. So really just a big change in business model for everyone, including the partner ecosystem, and how vendors help work with their partners and how they're structuring their incentives, their payments to partners in order to help support partners who have traditionally been compensated for CapEx purchasing. So helping to incentivize the entire ecosystem to move towards this type of model. So from here, we'll talk a few minutes about data center trends before I pass it over to Eric to go over the devices trends. As far as the market forecast here, so you can see a little bit of a clearer view of just the data center forecast. It is outgrowing the devices space. So if you recall, our overall forecast was at about 33%. We're projecting a 42% CAGR in the data center space specifically. currently, as far as vendor share goes, we see HPE GreenLake currently leading the portfolio of vendors here in terms of overall market share. In 2021, of the forecast that you see on this slide, GreenLake probably represents about 40% of that forecast in 2021. So we think that the vendor share is absolutely going to diversify more in the coming 2 to 3 years. Out to 2024, I do think GreenLake will continue to still be a very relevant and popular offering in this space, but I would estimate probably closer to more like 25% share moving forward. As we've seen, again, just so many more offerings come into the market, even in just this year alone, that have relatively small revenue in 2021, but certainly have the potential to ramp up. We talked about COVID-19 already in the last slide, and probably don't need to belabor that point. But one of the absolute big trends we've seen in the subscription services market in 2021 has to be storage as a service and data protection offerings. So we've seen a number of those be announced from different vendors, whether that's Apex or Dell, whether it's NetApp. We've seen this as the most common starting point for vendors' portfolios, and I think that makes sense because customers really have a lot to gain from utilizing storage as a service. In the traditional storage purchasing model, there's so much wasted spend on over provisioning. There's an easy value proposition that can be illustrated for customers in the potential ways they can save costs, they can scale easily. It's just an easy starting point that also has a big impact from the customer's perspective. So I think vendors have kind of broadly identified that as low-hanging fruit in the hardware as a service space, and they're really going after storage as a service aggressively. And then data protection being kind of a subset of that, looking at backing up environments and doing all of that kind of more specific work within storage as a service. So that's absolutely been at the forefront of new product announcements in 2021. The other piece we see is just the vendors really building out software capabilities in a number of different ways. So we see examples like AI-based automation of workload management. We see a lot of talk around how can vendors help tackle application modernization with Kubernetes-based platforms. In the case of HPE GreenLake, announcing the Ezmeral App Marketplace is kind of a big change in the OEM environment, and I'm curious to see how other vendors respond to this announcement, with Ezmeral Marketplace essentially being very similar to that of AWS Marketplace or Azure Marketplace, so a place where customers can purchase apps within the HPE environment and build that into their subscription models, whether that's third-party tools or other software. So ultimately, that type of approach may add a lot of value for customers down the road. I think we're still very early on there, and app marketplaces are absolutely challenging space to break into in terms of recruiting numbers of ISVs and to participate in those marketplaces. But I do think that that's definitely an area we'll continue to watch, going into the next year and the following, to see how other vendors might respond to that and try to expand those capabilities in their own as-a-service platforms for building more and more into that subscription and making that subscription more and more sticky, and just owning more of the customer's overall environment. And with that, Eric, I'll turn it over to you to talk about some of the top devices trends.
All right, thanks, Angela. And bear with me, my voice is not 100% today. I'm battling the flu, but we'll try to get through everything. So the devices portion of the hardware subscription services market landscape falls mostly under the PC-related device as a service categories. Depending on the vendor, like Dell, they call it PC as a service or PCAS instead of DAS. We don't count things such as smartphones or other devices within the forecast that would, and we don't count the consumer side of any sort of DAS. It's primarily focused just on the commercial PC market. So we have the device hardware subscription services market growing at a 26% CAGR year to year throughout the forecast. And this includes forecasts from Dell, HP Inc., Lenovo, Apple, and Microsoft. And as we mentioned earlier, we don't include rest of market within this forecast. It's just those specific vendors, which is the majority of the DAS market anyway. DAS is expected to surpass $6 billion annually by 2024, up from about $2.5 billion in 2021 in terms of revenue. In terms of short-term growth, in general, the better the commercial PC market does, the better the PC services do. And with the rebound in commercial revenue over the past few quarters and the continued shift to hybrid working and reopening of offices, we expect DAS to remain a very attractive option for both large and small businesses heading into 2022. Some of the trends that we have been seeing include growth in demand for DAS from many different verticals. For instance, the education market, including both the K through 12 and also higher ed, university and colleges markets, were both very interested in DAS offerings during 2020 and 2021 as schools battled to stay open, or they were switching to hybrid or remote learning environments during the pandemic. These markets don't typically adopt subscription-based services compared to some of the other verticals, so it's interesting to see the growth there. Other verticals that are seeing strong demand include professional services firms, healthcare institutions, government and public sector, other telecom, tech companies, or other IT companies. Despite all this new or increasing demand in a range of verticals such as education, these markets are still very small in terms of overall DAS revenue. We continue to see the largest customer deals and the majority of DAS revenue stemming from large enterprise and SMB specifically markets. In general, we see about 2 to 3 year DAS contracts as the typical length, with vendors offering more flexible options more recently due to the unpredictable market conditions surrounding the pandemic. This is specifically targeted at SMBs who need that flexibility to be able to scale up or down depending on how the market shifts and impacts their business. We expect to see SMB businesses grow the fastest over the forecast period as companies continue to switch over from a traditional CapEx model to an OpEx business model, and they find leasing their devices to be an attractive alternative to having to own and manage their own PC fleets. However, large enterprises are going to continue to drive a lot of the DAS revenue. Cast due to their sheer size, some of these customer contracts include hundreds of thousands of DAS seats per deal. Another big trend that is driving DAS adoption and is a major focus area for vendors is security. All of these DAS offerings are touted with various endpoint security and security support services to help protect the PCs and all the DAS deployments. This is an important well, this has always been important, but it's more recently been a prime topic due to the pandemic. As people were forced to work remote for the first time, many people were taking home PCs and no longer getting the protection of an in-office network. Other people that work from home, they don't update their security software as much on a regular basis. This caused a spike in ransomware and other cyber attacks and threats since early 2000, with the majority of these attacks targeted at remote workers with these more vulnerable devices. So DAS offers the simplistic way for companies to ensure that their fleet of devices stays updated, protected from these threats, and if something was to happen, they would be supported by a range of services to quickly address and resolve these issues. The ease of mind for these small businesses is a big selling point for DAS vendors, and we expect to continue to see security capabilities remain at the forefront of the DAS go-to-market messaging from vendors moving forward, along with the flexibility for small businesses. Some vendor details. From the vendor perspective, HP Inc. has been the leader in DAS revenue and market share as of 2021. They leveraged their strength in managed print services to quickly get a DAS offering to market a couple of years ago and has continued to build out on this business. They held the lead through the forecast, but the other two PC vendors, the major ones, Dell and Lenovo, both are going to slowly catch up throughout the forecast period. They already both have significant DAS businesses now. Dell has a robust PC as a service offering. Hasn't really seen as much public attention in announcements lately due to the focus on its Apex solutions. However, this PCAS business is still a very large and growing portion of its PC services revenue, and is going to continue to see strong growth throughout the forecast period as it slowly catches up to HP. Dell has begun to recently announce some new updates to its services, including, I believe it was about a month ago, they launched their new Support Pro suite as well. Now that VMware has spun off, I would expect to see more focus on areas such as their PCAS portfolio, as the CSG business is going to be put more in the spotlight in terms of driving top line profits and margins now that VMware is no longer there. Meanwhile, Lenovo has the smallest DAS business of the big three, yet it's growing at a very strong rate and is also expected to continue to gain market share throughout the forecast. Lenovo has seen strong adoption of DAS throughout the pandemic. They've cited consistent triple-digit growth or close to that in their managed services and as a service revenue segment over the past few quarters, especially since they launched their solutions and services group at the beginning of the fiscal year to put a bigger focus on solutions and their services business. We expect their revenue to continue to grow with the DAS business joining their recently announced TruScale Everything as a Service portfolio, which also includes their data center as a service offering. And Microsoft and Apple are both much smaller in terms of revenue here, with both businesses offering subscription services, but not specifically making it as big of a top strategic PC strategy comparatively to HP, Dell, and Lenovo. And then in terms of geographic regions, we definitely continue to see North America as the majority of the DAS market to date. Over the course of the forecast, we do expect to see other regions continue to have elevated demand for DAS and see strong growth there. But North America, specifically the US, will continue to remain the largest market in terms of DAS revenue throughout the forecast. And just before we open it up to additional questions, I just want to reiterate this is the report that this webinar is based off of. We published the Hardware Subscription Services Market Landscape this week. It's a semi-annual publication, includes a 5-year forecast, which we've been referencing throughout the webinar. It covers the total market views and trends, as well as diving specifically into data center and DAS markets. There are specific vendor profiles on each of the companies included. Does not include the rest of the market, like I said earlier, just the 5 PC DAS companies, and also I believe there's 8 or 9 data center vendors. And in the report, we also cover recent as-a-service announcements, partnerships, and other offerings that come to market. And then, in addition, we have some other related research and reports, including benchmarks for both the devices and data center markets, as well as vendor-specific quarterly reports on a range of device and data center vendors. And then we have additional reports and research in the plans for 2022, including expanding our coverage on the infrastructure managed services market. And with that, I'll open it up to any questions.
I will let you pause to catch a breath, Eric, and I'll take the first question that I see on the list here. I'm just going to jump back to the slide. I think this question is referencing. So the question is, what is contributing to improved value proposition as being a market accelerator? So the improved value proposition here we're referring to is really talking about how we've seen, especially on the data center side, offerings have evolved quite a bit. A lot of these offerings originated out of the financial services arms of these large OEMs, Dell, HPE, Cisco included in that as well. We saw, a year or two ago, for example, HPE announced a reorganization where they moved GreenLake out of their financial services, business and into, their services organization, signaling that these offerings are really as-a-service offerings. It's about developing the services portfolio and the capabilities for customers more so than focusing on just the actual literal payment model in terms of consumption on a gigabyte or whatever that consumption model is. So the value proposition has been shifting as vendors have kind of made the realization that their focus is on solving customers' challenges versus just mimicking a payment model. The payment model is not really the reason that a customer might choose public cloud over an as-a-service or an on-premises offering, right? I think that's pretty well established fact today. It's the agility that customers might prefer in public cloud or flexibility, whatever that may be. That's really the value proposition that OEMs need to be chasing after versus just focusing on the payment model aspects.
So I can take one of these. So in terms of the what data is included in the DAS PC benchmark, if you're referring to the related reports, the devices benchmark, we include revenue breakouts on PC hardware, PC services, tablets, smart devices, and smartphones. In terms of the data within this hardware subscription services, it's just a revenue from a 5-year annual viewpoint.
Right, and that's within this new market landscape. That's in the report broken down for each vendor that's covered. For the vendors like Dell that have a presence in both space, that it breaks down their devices and data center business separately. And as Eric was referring to in TBR's benchmark report, we do cover PC and data center services from a close to the box perspective in terms of revenue and profitability in those other benchmark reports. So those reports look at, in aggregate, all of the close to the box services that are sold from essentially the same vendor set that is covered in this report, a little bit broader. Eric, I saw there was another question that I think might be in your wheelhouse here. So for the DaaS offerings, do you see the biggest channels to market in the SMB space being direct sales or through channel partners?
I think it's definitely channel partners here are very important. It does depend on the vendor, but we are seeing a lot of partners, direct as well, but partners are very important, way more so than in large enterprise.
Right, and I think I would echo that. In the mid-market space as well, on the data center side, we see the partners playing a very critical role in achieving scale, and on the vendor side, I think that too is where we've seen a lot of evolution in the offerings to make them more modular or more easier to sell and easier to scope in order to achieve any scale through channel partners, especially as we get into more mid-market, more SMB sales. Just that need for the transaction to be simplified is really, it's growing. So we definitely see the partner ecosystem playing a huge role there. Just reviewing a couple other questions. So one of the next questions we see here for devices as a service is multi-brand table stakes, or are customers open to a single brand? Eric, do you have any thoughts on that?
I'm not sure what the question is asking.
Okay. I think my interpretation of the question here, I envision is, for example, we see vendors like HP also has an Apple, program within their DaaS offerings, multi-brand in that way. Is my interpretation of the question, whether customers are looking for the ability to bring in multiple brands. I think I've heard also.
Okay.
Yeah. So
certain of the vendors do support other PCs outside of their own, but obviously with a preference on their own. For instance, I believe Lenovo supports all different they have some Apple and other devices as well. In terms of there's probably not multi-brands on one specific company. I would think they would go with one or the other if it's asking would an enterprise specifically come in and get devices as a service for HP and then also for Dell. I think they would pick one, and the DaaS market is very sticky in general. So once a customer has chosen one of them, they're unlikely to just go swap to a different vendor.
Mm-hmm. Yeah,
and
I would say.
Go ahead.
Oh, I was just sorry about that. I was going to say on the data center side, we've seen less so that vendors have multi-brand offerings in their own portfolios, but that we see the partner ecosystem sees this as a great opportunity to add value because the channel partners generally have access to more than one offering. They can bundle different as-a-service offerings together and create multi-brand offerings. So we are hearing that happening, and that is is one way that partners are adding value for customers.
So the next question on what margin percentage do you typically see being applied to laptops, desktops? I don't have a specific percentage for each of those, but I believe in terms of a contract, I think we're seeing somewhere around 75 to 80% of that is hardware, and the rest being services.
I would agree with Eric in terms of the revenue contribution. Still, in these deals, we're seeing a big chunk of the revenue is ultimately from the hardware. It's really tough to say in the as a service offering, what percent of the margin goes to the hardware versus other services. Ultimately, when the negotiations happen, I think discounting can come out of a lot of different places. So kind of tough for us to answer right now on the margins within the solutions themselves. But we do see from a revenue perspective, most of the revenue currently is being derived from the hardware versus services attached. So let's see, are we seeing in the device as a service space legitimate month-to-month, completely flexible models, or OpEx versus CapEx? From what we've seen, it's tricky, especially from the observer's perspective, to understand the true details of individual customers' deals and structures. Generally, we do see that the customers are establishing month-to-month or at least monthly payments. There generally is some sort of end to that contract, though, right, where a renewal comes up. So whether that's 1 year, 3 years, 5 years, I wouldn't say it's a true month-to-month. It's more of a committed term with the monthly or quarterly payments, and then that's ultimately going to be renewed or renegotiated at the end of that term. And I think we're kind of reaching some of the end of our questions now, unless anyone else has further questions. Just one note, it's come in that the PDF download had some issues for some of you. Haley has updated the PDF that's available to you now through On24, so if you just try to download that again, you all should be able to get the PDF with all of the slides included. So sorry about that, just technical glitch. Looks like, let's see, one more question coming in here. Are we seeing any large enterprises using refurbished hardware versus new hardware in devices as a service deals? We have heard.
Yeah, I have not seen specifics. Go ahead, sorry.
No, you go ahead, Eric, and I'll follow up.
I was just going to say I haven't seen specifics into whether it's new or refurbished. I think a lot of it is usually new hardware. That's part of is getting the latest PCs in front of you.
Yeah, I would agree. Especially on the devices side, I think a lot of the value proposition comes from that latest and greatest. On the data center side, I do think that refurbished hardware could potentially down the road come into play more often as customers get more and more comfortable with thinking of the as a service offerings really more like the way they think about infrastructure as a service from a public cloud vendor. I think today, although these are as a service offerings, customers still have curiosity about what's under the hood, what the technology is supporting their workloads. So while they may not really own this hardware, it is in their environment somewhere. They have more curiosity, I think, today than in comparison to true infrastructure as a service where they really have no idea what hardware is running. Over time, I think that may change. We may start to see more commonly that refurbished hardware comes into play, especially as there's more engagements that have kind of this evergreen aspect of, just continually updating, pieces of hardware within the ecosystem, versus getting away from that concept of buying a specific, piece of infrastructure and replacing it, getting more into that evergreen mentality. Great. Well, I think we have gone through the full Q&A. So, from Eric and myself, thank you all again for joining us. And Haley, I will turn it back to you.
Thank you.
Thanks, Angela. And thank you, Eric, and thank you everybody for joining us. Sorry about the slide deck confusion. I double checked the one that's up there now should be good, and feel free to reach out to webinars@tbri.com if it's not, and I'd be happy to send it to you via email. If you have a few moments, it'd be greatly appreciated if you could fill out the survey that's going to pop up on your screen. We would really appreciate that. And what else? A replay version of the webcast will be available after the event, and it's going to be sent out to all of you via email. To view a list of our upcoming and past webinars, please visit tbri.com. And be sure to join us next Wednesday, the 17th, for 5G market update, entering the ramp phase of the global build cycle. Thank you all, and have a great rest of your day.